Hi guys, welcome back to the channel. This is Alessio Puccio, and in today's video, I want to do something different. I'm a Wyckoff trader, and in the, let's say, Wyckoff world, there are very different ways to trade Wyckoff. Um, there are people trading Wyckoff on a naked chart, just trying to spot accumulation, distribution, reaccumulation, and redistribution. There are people trading it like a confirmation in a zone. So, for example, in a supply zone, you wait for price to come back in that zone, and then you look for Wyckoff. And this is what I, used to do when I started trading. And there are people like what we do with Metafix, what I learned, that trade Wyckoff in a different way. I would call it like a simplified Wyckoff. Simplified Wyckoff, why? Because we do not need to label the schematic, label the phases, understand where the last point of support or the spring or the test or the selling climax or everything you can learn about Wyckoff is. We do not care about that because we simplified it. Okay, and I just want to bring this concept to the channel because I told you that I trade Wyckoff, but at the end of the day, you never saw me trading Wyckoff. Okay, so I want to explain you why I say simplified Wyckoff and how actually this applies in what we do every single day. Okay, so as you already know, I I trade a system based on the EVCs, entry, validation, and context. So three timeframes or four timeframes, like in my specific case, where I added a second context timeframe just to be aligned with the overall, bias. But the system, the basic system, is the EVC, entry, validation, context. So in the context, we define the bias. We understand if we are in a stage two, and when I say stage two, I mean in a markup. So price is delivering. So we're not stuck in a consolidation that could be an accumulation or a distribution, or sometimes a bigger reaccumulation. It depends. So we need to see price delivering like this one. So this was the stage one, and this is the stage two, the delivery. So we need to see price delivering. In the validation time frame, we need to see the price pausing. And this pause, the pause on the 5, the 10, and the 20 EMA, it's just a reaccumulation. Okay, so if you think about the cycle, we have the accumulation, then we have the markup, and inside of this markup, we have small pullbacks that stuck. Okay, and these small pullbacks are nothing else than these pullbacks. Okay, so since we are in the stage two, so the delivery, and so in the markup, we want to see price in the validation time frame giving us pauses, because those pauses mean that price is reaccumulating, or better, it's distributing. So there is a sort of break of structure, and we're going to see that, with the purpose of reaccumulation. Okay, so for example, okay, so this one is this one. As you can see, if you're not used to this methodology, this for you could be a break of structure. So you could say, okay, price broke the structure. It's possible that it wants to continue going down. But the truth is that since we are in a stage two, delivery, since we are building, okay, pauses, and so reaccumulation, it is more likely that price will continue to go higher than reverse. So this break of structure, that it's actually a break of structure, instead it's a break structure with the purpose of reaccumulation. So basically, if we want to say it like Wyckoff would say it, the composite operator is trying, to how can I say, to I just don't want to use, weird words, but let's say that the composite operators is trying to, to force you to go short because there's a break of shock structure, but instead it wants to go higher. Okay, you can call it stop hunt, you can call it induction, you can call it absorption, you can call it whatever you want. Okay, this is why I was trying to find the right word. And so I just want to explain you this concept through the Wyckoff's lenses. So Wyckoff theorized the composite operator. Composite operator is a big operator composed by banks, hedge funds, and big investment firms. So the big players, okay, the smart money. And Wyckoff say that you have to imagine that there is this composite operator that is constantly trying to hit your stop loss, okay? It's constantly trying to induce you to go in the wrong way. But this is not true because the composite operators doesn't exist. But if you want to read the prices and charts through Wyckoff's lenses, you need to understand and you need to start thinking like the composite operator would think. Okay, so I know that it could be a little bit complicated, but if you follow me, everything becomes simple. Okay, so if you imagine you as a retail trader that you are constantly fighting against these virtual composite operator, so big banks, institution, big players that wants your money, you start understanding how price moves. Okay, so every time you see a break of structure or price that in a certain time frame, in a specific time frame, is just maybe changing the structure, changing the bias, changing the trend, but you already know that you have 3 time frames to perform your analysis, and in the first you have to define the bias and you have to to see the delivery. In the second, that it's the validation, you need to look for a pause for reaccumulation, and in the entry, this is one, you need to find a Wyckoff entry, a double MB, okay, the double break. Then you already know that that break of structure is not actually a break of structure, but could be your point of entry because you really and truly understood how the cycle, of the price moves and behaves. And this is very, very, very important because all the markets are based on that principle. And the funny thing is that every single market moves the same way and has always moved the same way. Okay, it's not something that I'm gonna do in this video, but if you go back about 100 years ago and we look at how the price moved, it's the same. It's the same accumulation, markup, so delivery, distribution, markdown, nothing else. Okay. And so I just had to introduce you to the Wyckoff word because what we are going to see today is how this this sort of breaker structure It's not a breakout structure, but it's the starting point to build our entry to, to start seeing and analyzing the chart to understand if we have an entry point. And because of that, why I say simplified Wyckoff, it's because inside of this double break that is my, entry methodology, what I learned from Mentafix, inside these, you have Wyckoff. You have the actual accumulation or Wyckoff, or you can call even these one is a redistribution. So you can spot a fake distribution right there. This is what we call the creek, and then this is the spring, and then price continue going up. So sorry, but this is something for another video. So this is a redistribution, but inside the reaccumulation, inside the reaccumulation we have Wyckoff. This is an accumulation. Okay, it's a Wyckoff accumulation. So when I say I trade Wyckoff, I mean I trade truly Wyckoff. Even if you don't see, even if I don't label everything, phases and everything about Wyckoff, this is actually Wyckoff, and I share these here. So this is the same trade with the same double break. As you can see, this is a double break that I will call from now on. I'm gonna call it double man block, DMB. Okay, because this is its name, and you can see there that if we lower the time frame, this is at 2 minutes. The entry is on a 65. You can spot an accumulation. Price pausing with the preliminary support, selling climax, automatic rally, secondary test in phase B, spring, test, sign of strength, last point of support, and last point of support. And the accumulation, in the real, let's say, schematic of the accumulation, we have last point of support here, and then sign of strength. Okay, I just decided to postpone the last point of support because for me the last point of support is the last point where price doesn't want to come back. So sometimes the price does something like that and go on. So it would be correct to put into label LPS here, but I label this way just because for me visually it's simpler. Okay, but if we got to see the real schematic, as you can see, we have preliminary support, selling climax, automatic rally, secondary test, then secondary test in phase B. So the secondary test phase B is just something that liquidated this secondary test and is selling climax. And then we have the spring, the test, the LPS, the SOS, so the sign of strength, and then, the starting of the stage 2 or the markup phases. So as you can see here is pure Wyckoff, and here is pure Wyckoff. But the nice thing, and I think something that I felt in love with is that we do not need to label everything. We just need to spot the double MB, there's one, and to buy stop the double MB, to buy stop the double MB, okay? It doesn't matter now the stop loss placement. This will be something that we will discuss in another video. This is just for you to understand visually that we need to buy stop the second break, the double break of the double MB, and then we play Wyckoff. Okay, so when I say and when I try to explain to you that Wyckoff is everywhere and it's everything, it's because everything is based on Wyckoff. If you see the charts through the Wyckoff's lenses, everything, and I say everything, will completely change. You need only to spot accumulation and markup. Or markdown if you want to short. When price is in a markup or in a markdown, you need to look for trades, because the key point here is that we do not need to enter there. We do not need to spot the low of the market or the, let's say, high of the market to make money, because we can't know where the low or the high will be. What we need to know is to spot the accumulation, and this is accumulation, and then after the accumulation, since we are aligning ourselves with the composite operator, we are just trading where we know. And when I say no, I mean no, okay? Statistically speaking, we know, we are certain about that the stage two has begun. And so the delivery is in action. And we want to put our money in a market that is already delivering, that has already, given proof of the delivery, instead of, putting our money in a zone where there is no clarity on, where the price wants to be and wants to go and in the near future. Okay? So everything you need to know is spotting accumulation and spotting mark up or mark down. That is the delivery. And you want to trade when price is delivering. This is the key. When price is delivering, you need to spot reaccumulation. Sorry, guys, just get rid of this. Okay. When price is delivering, okay, just a minute. Okay. When price is delivering, you need to spot reaccumulation. The reaccumulation are nothing else than pauses in the market. Every single pause is a break of structure, so a change of trend in a lower time frame with the purpose of the continuation. Okay, because of the composite operator natures of the market. So the composite operator, is constantly trying to beat you, let's say, okay, to beat you, to induce you in the wrong direction in order to take your order, to take your stop losses, to take your money, and then, push prices in their desired direction. So if you know that you are in a delivery, and I want to repeat this concept because this is key. If you already know that you are, and when I say already know, I mean statistically speaking, because you have a system, because you back tested it, and you know that, I don't know, 3 out of 10 times, 4 out of 10 times, it doesn't matter, you are right, okay? And this is another concept that we'll address in another video. We do not need an 80% win rate. You just need 20 to 30% win rate to make millions in the market, okay? 20 to 30%, nothing more. Because what's matter is the risk to reward. I risk a little to gain way, way more, okay? But this is not what we are looking at right now. So if you already know, statistically speaking, that the delivery has already happened, and is happening, you are putting your money in an environment where basically you already know that institutions of big money, smart money, want to push price higher. Okay, so when you see a pause in the market, that pause, it's not the start of the low or of the high of the market. Okay, that's not the high. That's not where the market is reversing. That's where the market is pausing in order to continue its rise. Okay, so after you know that you already are in markup, and you spot a reaccumulation, a pause on the 5, on the 10, or the 20, then and only then you can step down on the entry time frame and look for the double entry. Okay, and if you start seeing prices this way, everything will change. I promise you that everything will change immediately, because you will not find yourself stuck, in, let's say, a ranging market anymore, because you will not be trading ranging market anymore, because you know how to spot accumulation and so ranging market, and you know how to spot the stage two and so the markup or the markdown. And this is really everything you need. Okay. And since for me, this concept only was the concept, that made me make a quantum leap, I would say, in the market. I'm just trying to share with you and to explain what for me worked the best. And the concept of the composite operator and the stage two and the delivery and taking trades only in a one-sided market and things so on, it's a thing. I think it's one of the most underrated things in the trading world, because nobody talks about it. A lot of people, a lot of guru in the internet talks about supply and demand, talk about scalping, talk about entering on wicks, on top and bottoms, but this is not sustainable, because you don't know where the top and bottom is, but you can spot where the stage two is, where the delivery is, because the delivery, okay, remember that the delivery, whether it's a markup or markdown, so whether it's a long environment or a short environment, the delivery happens always after a ranging market, an accumulation, or a distribution. The delivery happens always after the market is accumulating or distributing. Stop. This is the key. So you need to understand how to identify accumulation, how to identify markup and markdown, and when you identified markup and markdown in the context time frame, you can step down in the validation and look for pauses. And when you look for pauses, other traders will think that those pauses, will be the starting of the reversal. And this is where trader gets stuck, because in this kind of environment, people are trying to sell. I'm trying to sell and trying to sell, trying to sell, but price is still going up. Why? Because we are in a stage two, in a delivery. So today I just wanted to show you how I trade Wyckoff, and I wanted to demonstrate that even if you don't see an accumulation labeled, or a redistribution labeled, or reaccumulation labeled, or the phases, or whatever you want to see, trading Wyckoff, even if you don't see that, it's there. We just found a simplified way to trade in order not to have to label everything and to get confused in random names that you don't need that. So yeah, I think this is one of the most powerful things I ever had. One of the most powerful breakthrough I ever had in trading. And I hope you enjoyed this video. I hope you really understood how you can really, change completely the way you approach the market, just simply paying attention to the markets that are already delivering, and be willing to put your money only on those markets. And yeah, I mean, it's not as simple as that. Obviously, you have to test your system, you have to have your case studies, you need to understand what you like to trade, what type of pauses you want to trade, what type of context you want to trade, what type of entries you want to trade. So you need to case study a lot, you need to backtest a lot, you need to develop, to build your own system. But the overall, let's say, concept behind this kind of system is simply this one: buy on a market it's delivering, this is already delivering, or sell in a market that is already delivering on the short side, obviously. And this, by the way, is also what the hedge fund are looking for. Hedge fund, and I remember because I remember listening to Juan Colon, that is the CEO of Dervinex, and Dervinex is one of the, and you'll find on this channel Dervinex too, because it's an hedge fund that, lets you trade and build your track record while investor invest in your strategy. And I remember listening to him in an interview that he made, and he said, we as a hedge fund, we are looking for traders that trade a trend following strategy. And the trend following strategy means that they are buying in a market that is already going up, and that they have a small risk for a big reward. So I didn't talk about win rate. He talked about small risk, big reward. This is what trading is, all about. So if you're serious about trading, if you maybe in the future want to trade for a hedge fund, if you want to make trading your career, please look at this video, just trying to understand what I'm trying to explain you, why I'm saying you to trade in a not to trade in a ranging market, but trade in an environment it's already delivering, while outside, a lot of traders, a lot of gurus, well-known gurus, say you that a market that has gone up, I don't know, 90% must go down. So you do not have to trade, those kind of markets, but it's better to trade a ranging market where you spot supply and demand, and when you can, predict top and bottoms. This is not what great traders do, okay? Kulamagi, Minervini, and a lot of other names. And I say Kulamagi and Minervini because this strategy is very similar. Anton Kalmes, even if he doesn't have an hedge fund, he doesn't care about having an hedge fund. Yeah, they all trade the same way. Trend following, it doesn't matter the win ratio, but it matters the risk reward, because you are in a market that it's already delivering, and the pauses in the market are not reversal, but are reversal with the purpose of continuing going up or down if you're shorting. Okay? So thank you for being with me. I hope this enlightened you a little bit. And if it's the case, please let me know in the comment. Just go on the Mentafix site. I have the link below if you want. I have an affiliation. I really don't want to talk about that, but if you want to help the channel, you can. And this is the best way. I'm not saying it because you can also don't use my affiliation link. You just go on the mentafx.com site and just try from there. So it doesn't matter where you go, as I say in the first video, but the only thing that matters is that you try, because you have to witness with your eyes what's different, why 90% of traders are stuck. Okay, so thank you for the video. Join the Mentafix. Let's try, give it a month, rewire your brain, and we're gonna see on the chart and in the next video. Thank you, guys.